Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is June 3rd, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not a financial advisor, so please do your own research and make your own decisions. So Tesla is really zigzagging a lot now. We are down $71.45 today, down 9.22%. Closed at 703.55. Post-market, we are down by $2.29. So let's look at the damage here. Let's recap a little bit, and we are going to do it a little bit more on Sunday for the weekly live for my members. But basically, we are back into the two down trends that we have. Two down trends, and we are back into both of them. And there are multiple patterns that are happening at the same time. So first downtrend is right here, second downtrend is right here. And today we gapped down. If we look at the 1 hour chart, it's going to be a bit more clear, but we gapped down on the 1 hour chart, but we did not gap down on the daily chart. But basically, so we are quite well into this first downward channel that we had since January 4th. And we came up and retested it here. We tried to break outside of it and could not, and are settling very close to 695.46, which is an important support. So yes, we have a hard time getting outside of this big downward channel. We came outside a little bit on May 31st. It was not a super convincing move. We did not have stochastic over 60. So without stochastic over 60, I'm always saying it. Without stochastic over 60, you should have some doubt that things will start moving up. It's not impossible, but there's a significant doubt, because when the stock is really moving, stochastic is along the way. So this was the first clue that this was a strange breakout that we had here on May 31st. And then the next day we came back into this here. And yesterday, that was the fluke, because yesterday we came back strongly outside, but we could not break this resistance right here. I'm going to make it a little bit darker. So we could not break that one here. This one I'm going to make thinner. It seems like we are maybe entering into a congestion zone. So it's entirely possible. So check for 695.46. If we break that, then we are definitely going lower. And we could go as low as 550 or so, even lower than that. So 695 is quite important to check. What we can definitely start to see here is this congestion zone that is forming 779. So let's say 780. So 780, and so between 780 and also this one here at 620. So maybe this is what is going to happen. So if we break on Monday, if we break 695, then 619 is the next destination, in my opinion. Let's go look at the 1 hour chart. So big drop during the day, huge drop during the day, big gap here. So no trading happened between these two numbers, basically. So big drop, and then we just stabilized just a little bit above 695. This time we are in a double support kind of thing. So the double support is just above 700. So 701 is really the support here, and it has been touched here. So it's not a new support. It has been used in the past year in many places. But yeah, that's the big question next week, if we are going to bounce from that or if we're going to cave in from. That's what we need to check. Let's look at the VIX. VIX is still going down a little bit less here. So the low is not as low as it was yesterday. In fact, it's stabilizing a little bit because the high is lower, but the low is higher. Let's look at Dow Jones here. So Dow Jones is stabilizing also. We had a nice move yesterday, but it didn't pan out. But we still have stochastic over 60, so all is not lost. So maybe this is just a bad day and things can recover next week. So just be mindful of that. S&P, pretty much the same thing. S&P still sideways day. And for NASDAQ 100, it's going to be the same too. What might have had Tesla fall harder than the indices is that we have this news that Elon Musk asked Tesla execs to pause all hiring and to cut 10% of staff, the regular staff, the salaried people, not the contractual people. And apparently, you can read this article right here, but apparently Elon Musk has a super bad feeling about the economy, wants to cut about 10% of jobs at the electric car makers. So if Tesla has a bad feeling about the economy, and Tesla is doing extremely well in terms of the revenue increase year per year, they are growing at over 50%. So maybe this does not bode well for other automakers and the economy in general. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. You can click on my TradingView affiliate link and also other affiliate links. I'm going to wish you a great evening. We are going to talk on Monday if you are not a member. And I'm going to tell you à la prochaine.